Thank you.
Let's talk about tariffs and trade, because I don't think I've had a VC person on since all this started to really get crazy. What's your perspective?
So, I was down at the Capital Allocators Summit in Nashville last week, put on by Ted Seides. We had 150 of the biggest chief investment officers in the world that came around, and we're dealing with it in real time of all the volatility. I was fortunate to be in the venture capital seat, that I have the longest view in the room. And that's kind of a FirstMark thing of like, hey, there's frankly not much we could do in real time, different than the long short guys or sadly the long only guys who felt stuck. From our perspective, having the longest view in the room means, hey, being able to live through cycles, being able to eat the short-term volatility for the long-term gains. So we're not really doing anything differently in the short term on deployment because we anticipate seeing a couple different cycles by the time we have to exit. The thing we're feeling the pain on, like everybody else, is short-term liquidity. And, we often talk about what's the IPO window doing? And it was creeping open as we discussed. There was a lot of stuff in registration, and it was slammed shut by the risk and the volatility created by all of the tariffs. We do feel confident it'll reopen again this year, but it was for everybody in the private and the illiquid markets. That was going to be a big escape.
The conversations that you're having with your portfolio companies.
Yes.
From young to even more advanced in their growth stages is what? Like, how does that sound these days? Because you have the ability, you've done this for a long time, and you understand cycles. Some of these younger CEOs and founders may not, and this one's really different.
It is, and some of them hadn't even seen real volatility, right? We did an analysis, and probably over half of our founders and CEOs weren't even working during the financial crisis. Let alone, some of us who had gone back and saw the tech downturn of the early aughts, and this is, a little bit of, hey, this is, seeing something else like Robert Duvall in Apocalypse Now, and seeing everything shake out. But what we're telling them, and no different than anything else, that volatility and uncertainty increases risk. Risk increases the cost of your capital. So you need to re-rate your projects, and whether that's hiring or your burn or your customer acquisition spend, knowing your cost of capital just increased. And if you need to access capital, especially in times like that, it's going to be a lot more expensive. So, watch your nickels and dimes and be capital efficient.
Okay, so we go from the younger ones to the going public ones, or wanting to.
Yes.
But in the last 2 weeks or so, we've had several high-profile delays. Is that of companies that were going to go public? Are we going to see more? I mean, how far now has the timeline been pushed off?
I think it's pushed off to Labor Day. Unless something dramatically changes, we knew a lot of the companies, or a good half dozen or so companies across industries we've talked about, from crypto and things like Circle to healthcare and things like Hinge to consumer internet with StubHub, that we were going to get a nice little buffet and basket of IPOs going into the summer, and all of them threw it into neutral and said, hey, I want to see what shakes out. I want the market to be more settled. No one has said, I'm going to try and push through this.
Yeah.
And then I think, exactly. And they did. And you talk to their bankers, and they pushed through that. That was not a glide path. And so, you're probably going to bump up against the summer once you get enough clarity from this administration on what's going on, and therefore, sadly, you're flipping post Labor Day.
All right. Good update from your perspective. Thank you for.